States. I think diverting any field crop into ethanol other than perhaps sugar is unsustainable. That is because the pressure for food needs from the world is going to become so large in the future that it's going to be very difficult to justify moving crops into fuel, burning crops as fuel, rather than burning them as human energy. This chart looks at the population growth into the future. That's the middle line going into the future. These are population forecasts from the U.S. Census Bureau. The trend line is the growth that we've seen in agricultural output up until now, and as you can see, that stays slightly above the rate of population growth. But when you look at it more closely, you'll realize that the gap is shrinking. The big gap there that we see it in the early part at around 2006 to 2008 was the rapid expansion in corn production in the United States to meet ethanol needs. You can see as we go forward, though, that the food needs are going to shrink that gap significantly. The other line there is the one that's the scariest. Plant breeders in some parts of the world are reporting that they're gaining about 0.5% a year in yield gains, average yield gains from conventional plant breeding programs. If the world were to average only 0.5%, then you can see that the growth in the food supply would fall below the relative needs of the population. That is a problem. This demonstrates it more cogently. 0.5% annual increase. Eventually you're going to reach a point where there are going to be absolute food shortages in the world. There are going to be extremely high prices. We're basically going to tilt back into the era of 1960 and prior, which was the time when the Green Revolution was initially started to answer world hunger. And if we get that low rate of growth in annual food output, we're going to end up back in exactly the same situation as we were several years ago. If we can maintain the current trend, which is close to 1%, we're still not getting, agricultural output is still not really keeping pace with the growth in population, and you can see that in the future you are going to have years where there's going to be absolute shortages, because this is a trend line. I can't predict when a drought will happen, but we know they will. And we know there's going to be years where the food output is going to drop well below the needs of the human population, and those are going to be big problems. So what that suggests is that as we go forward through time, we may see periods of shortage and periods of extremely high prices no matter what growth rate we have, unless we can grow faster. That's why it's very encouraging to hear the people from Africa talk about what's going on there. I've had people say to me that they felt that in the future Africa would be the breadbasket of the world. That would be nice, and I think it would be good for Africa, because to me, no region of the world, no country can grow its economy and grow its country for its people and have education for its children unless it has food self-sufficiency and food security. Because if people don't have to worry about where food's going to come from, they can then focus on raising their children and educating them and thinking about the future. And I really hope that I believe this is where Africa is going. It's just going to take time. Some people would like to see it happen in 2 years or 3 years. I don't think it's going to happen that quick. But to me, that's like trying to have things happen in TV time, which is a North American affliction. If it doesn't happen in TV time, we think it can't happen. And we just have to be more patient, and we will get there. Pulses are actually a very minor crop from a world's perspective. From our perspective in this industry and in this room, it's a really significant crop. I mean, after all, we spend all our lives dealing with it and thinking about it all the time. And believe it or not, I almost do think about it all the time. I tend to be a little bit too intense about the things that I work on, and as a result, I'm a really terrible conversationalist. So when we have people over, I sit silently in the room because I wonder why don't people want to talk about peas and lentils? All they want to talk about is hockey. I mean, who cares about hockey? Let's talk about lentils. Canada's pulse breeders, as I mentioned, think they can add 1% to the average yield per year. I don't know how long that can continue, because plant breeders in other parts of the world say that they feel like they're reaching a roadblock, that suddenly they can't get those gains. So obviously, in order to meet the future potential, it's going to have to be a combination of things, whether it's from plant breeding, bringing new land into production, diverting food from non-food uses into food uses, improving storage in various countries of the world. India is a good example. Russia probably needs to do a lot to improve their storage as well, to reduce the crop losses during harvest and after harvest, to become smarter about the way we use the food ingredients so we maximize their potential in the diet so we can get the most use out of them, and resulting in less waste and things like that. And those are the sorts of things that I think need to happen to ensure that there are no future shortages. Pulses don't get the same attention as soybeans or wheat from plant breeders. As Gordon Bacon points out, wheat has been getting a lot of attention in terms of quality. Pulses do not. The focus on pulses has been on yield, but not on quality, and we're not as keen in that sector about figuring out all the different uses for the crop and how to make sure that the crop that's being grown more closely matches the needs of the market, which does improve the value of the crop both to the consumer and to the producer. The other point, obviously, is long-term yields may be less than 1%, which I've dwelt on a bit. The trend growth in field crops in millions of metric tons, if you're a trader, this is nice. I mean, it looks like there's not going to be a problem. There's going to be hundreds of millions of tons more grain to trade in the future than there is today. The growth profile for export nations and for traders is ever upward, although that hides the problem that the world faces, but for us who are interested in business, it always looks good because there is going to be continuous growth. Global pulse production has been shrinking as a share of the diet, and I'll show you that in another slide here. I came up with 3 scenarios for growth. This is based on mathematics, and they didn't quite work out the way I wanted to. I wanted to have a high, medium, low. You end up with a high, medium, low, but for different reasons. But you can see that in all cases, except one, there will be growth in the production of pulses in the world. How strong that growth is depends on whether or not we can bring new areas into production, such as expanding in Central Europe. The expansion in Africa and places like that will be critical to expanding pulse production in the future. Canada could grow a lot more pulses than it does. It could, in theory, grow a third of its acreage in pulses and have that be workable. In practice, that probably isn't going to happen, but that's always theoretically possible. Canada also has 4 to 4.5 million acres of land, which can easily be brought into production. It's currently being consciously summer fallowed every year, and that's something that could be a source of land in the future and would change the outlook for pulse production. If you look at it in the terms of all the varieties, edible beans is the largest share of the market. That's always been the case. Peas are fairly significant. Lentils, from a Canadian perspective, it's lentils and peas. Chickpeas being a very small commodity. From the world perspective, it's edible beans. This is the most troubling thing, is that when you look at the different outlooks for pulse production, it looks like we could be very well going back into a period of reduced per capita consumption of pulses in the world. And that is just a reflection of a lack of proper expansion of supply. In returns from pulses are not being competitive enough to the farmer, which is not keeping them interested in the crop. And these are problems as we go forward. And under the different scenarios, the problem becomes more exaggerated in terms of what's going to be available to the human population. This just looks at it in a different way graphically, and I should have removed this one slide, but I didn't. And it just pictures it in a different way, and it's the exact same information, only it shows it by commodity. That's the long-term outlook, which seems sort of scary on one side, very full of opportunity on the other, certainly for this industry. There is tremendous growth potential around the world for pulses, for the pulse industry, and for agriculture in general. Looking forward to 2012, pulse production should rise next year. We're looking for increase in pea acres in the United States, increases in dry edible beans and peas in Canada, dry edible beans in the United States, peas and lentils both in the United States. Different parts of the world perhaps growing more, Russia growing more, India hoping to grow more. So there's I think there will be a general increase in production. That could bring with it a tendency for prices to become lower through 2014. And here I'm thinking about average annual prices, it doesn't mean that you won't have moments of tremendous spikes, and you won't have commodities which aren't very bullish. But overall, I think we'll see a bit of a downtrend for a couple of years. Lower prices always have the effect of pushing land out of production, and then we could see that happen in about 2015, 2016, which should probably bring about another period of more bullish market conditions. That's, it's one way of looking at it. The other way is that we have to bear in mind that these values have to be competitive relative to other crops. And that's something I'll try to talk about a little bit later on. The World Pulse forecast looking forward to about 2016. I see a bit of an increase next year. The potential for a bit of a downward slide into 2016, which I talked about, which would just be the result of lower average prices. If prices stay firmer relative to other crops, then that would change. There would be more upward tendency for pulse production going forward. I thought I would just spend some time on specific crops. Field pea outlook for 2012. Canadian acreage will be up because movement this past season has been amazing. By the end of December, over half of the peas that were available in Canada were shipped. Prices to the farmers were very, very good. There's reasonable optimism about what will move in the rest of the season. However, it doesn't sound like India is going to be a strong buyer until new crop peas are available out of Canada. But I think there's a lot of optimism that China will continue to buy, and other parts of the world there will be fill-in demand. We're in a situation where, when I show you this, well, we'll talk about it when we get to the supply demands. U.S. acreage will rise. Farmers in the United States could not plant all the peas and lentils they wanted to last year. That land is going to come back, some of that land will come back into production, hence the acreage will be up. France is going to decrease peas, more than likely. Apparently, the subsidy that was available to the growers in France for pulses that were diverted into livestock feed use are going to be gone, and that will discourage, or should discourage, farmers from growing peas this year. The percentage of decrease is thought to be maybe 10 to 15%, but that's fairly significant. I think with the increase in Canada, Canada is the most important exporter in the world. The increase may be substantial enough that pea prices on average will be lower next season than they have been this season. When you look at it, peas, in terms of the whole pulse sector, I was a pea trader for a lot of years, so I tend to like this commodity. And you can see that I'm optimistic about the acreage, the production coming back towards 2016. Even though we'll go up this year, that should reduce acreage next year and result in a reduction in production for a couple of years. And then the lower prices that we see then will bring production back into the crop. And that's what you see happening here, with Canada probably having the most movement in terms of acreage. For production, in the last 5 years, the world production of peas has been just under 10 million metric tons. Last year, it was about almost 8.5 million, which is a significant decline. And then for the coming year, it could rebound to about 9.5 million. The biggest change in here on the upside is going to be in Canada. Some other countries are looking to expand. The United States could expand a little bit next year. French production could be up, though acreage could be down, and that's just a function of going back to average yields. And these numbers are obviously very speculative because we have to wait until the crop is being grown and how the growing conditions are in order to know what we'll be looking at in terms of yields. Since Canada is probably the most important pea exporter, I thought we'll look at the Canadian pea supply-demand, which kind of preempts what Gordon Bacon might have been speaking about when he talks about Canada later. Production is unlikely to get back up to the previous 5-year average. There were a couple of years in there where Canada grew well over 3 million tons of peas each year, and we probably won't get back there. Acreage will be up quite sharply, and with a return to average yields, that'll bring production up. The concern, though, in Canada is that it is really dry, and this winter, we're in our winter period right now, and it's been warmer than usual, but the warmth hasn't been accompanied by very much snowfall. And as a result, the land is barren out there. When you fly over, you see a lot of open fields. You almost get the feeling you're going to see a piece of farm machinery out there working the fields, although it's a bit cold for that. The problem with this is that we will get periods of time where the temperatures drop back to what would be more normal for us, which is -10, -20, -30 with extreme wind chill, maybe worse. I've experienced worse on the prairies. When that happens, what it does, if there's no snow on the ground, it dries out the top several inches of the soil. And that becomes a real challenge when it comes to seeding time, because the soil will be dry. It'll become critical to have moisture at that time. If there's no snow cover, then there has to be a very timely rainfall. Otherwise, the farmers are planting into very dry soil. They'll plant quite deep if that's the case. Peas they like because they will go deep, and they'll try to plant them into moisture, but they'll still need good rainfall after seeding is complete in order to get proper germination and a good crop going. And then we're going to need, if we're going to be dry, we need timely rains. I know a friend of mine was being trained at Northern Sales several years ago, and he wondered about this. He said it was very dry in the prairies that year, and he was very concerned about the status of the crop. C.O. Schwartz, who owned the company, said that he wasn't to worry about that because Canada only needs 2 rainfalls a year to have a crop. They just have to be at the right moment, and they almost always come. It's not quite true, but we're always eternally optimistic. If baseball is like cricket, then you know what I'm talking about, because you always believe next year is the year that your team is going to take it and going to win. You can see that the ending stock projections for peas, though, are incredibly low. There's a potential for it to go down to 200,000 tons by July 31 of this year. It may be higher if the demand from India, if India doesn't buy anything, then it will probably be higher than that. But I wouldn't get overly excited about that, because anything under about 350,000 tons is considered sold out. To be at 200,000 tons is like absolutely sold out. We're into bin sweeping territory when we're at such a low carryout. And it may be for that reason that number might be a bit low. I one time looked at it, I felt that on-farm stocks probably need to be around 125 to 150,000 tons to be zero, and that the trade in the last few years has been closer to 200,000 tons to be zero. So that tells you that anything between 325 and 350,000 tons is clearly sold out. If we get to these levels this year and next year, we're really sold out. So the price evolution next year would be one where you would start low because of the bigger harvest and probably work yourself up through the year. And I did try to do price forecasts, and I hate doing price forecasts because I'm always wrong. But I thought I'd go with a wide enough range, and there's a chance that at some point in there it'll be within my range. So I thought $275 to $350 a ton on an FOB track Vancouver basis. You all probably have a better idea what the freight would be over here than I do. And I would see those as good working numbers. I based that on what I felt the farmers ought to be looking at for their budgets if they were going to grow peas this year, and what they would hope to have. And it worked out to these numbers. So I think that they're a reasonable representation of where the farmer's thinking is at, and probably where the market needs to be. This just looks at the yellow price pea comparison for the last few years for Canada, France, and Australian dun peas. And you can see that in this past season, Canada has pushed way above the rest of the crowd, and that's just a reflection of the smaller crop that we had last year. Very, very strong movement in the first part of the season, and just that tightening of supply that's happened. And when you get bids up there and you get really good movement, you discourage farmers from selling. What you'll have happening in Canada is a situation where you'll be phoning around trying to buy peas from farmers, and they'll tell you they're all sold out. In fact, that may not be true. One year that happened to me. They told me not to call back ever again. I called back 2 months later, and they said, "Oh, I remember those peas we didn't have? Well, we got 20,000 bushels here that we want to sell you." So I realized that farmers don't tell the trade the truth. Maybe it's because all we want to do is, we're like life insurance salesmen, all we want to do is business. And they want to avoid us sometimes. The lentil outlook is a little bit different. We still have a problem with massive carryover from the 2010 crop in Canada. Basically, the world supply still feels very good, mainly because of the production in Canada, and that still weighs on the market. Acreage will drop. Price performance this year has been poor. It's been really bad for red lentils in Canada to the farmer, and green lentils have actually been good, but they're not doing as good as the other crops that the farmers can grow, and hence that production will be down. More importantly, the new crop bids on greens and red lentils in Canada are at levels that farmers consider ridiculously low. Greens not so much, but reds for sure. What we're doing in the market is saying to them, please do not grow these things next year or this year, and I expect that we will see a response. Again, U.S. acreage will rise because farmers who couldn't grow them last year will bring it back into production. And as I said, prices should be lower on average. I think prices actually will happen is prices will be lower on average for green peas, but for green lentils, but for red lentils they'll be higher on average because red lentils will bear the brunt of the acreage decrease. World lentil production forecast down this year. I think that there will be a production response that will bring it up in the next few years. And so we're looking at a situation where we should go into an upward rising trend in world production, and then prices will reach that point again where they tell farmers, please don't grow me so much, and we could end up with a bit of a price reduction. So I did think about these things, Pravin. If I look at the outlook for lentils, lentil production this past season and even for the coming season is actually going to be above the previous 5-year average, and that's why I think prices will just simply be lower. Canada is the most important producing area, and you can see a very substantial reduction there is going to happen. Whether the absolute tonnage, we have to wait and see, but I think you'd be thinking in terms of these magnitudes for what will occur. Turkey, the information I have is that they're looking for a bit of a reduction there as well. And Australia, I'm thinking could be more or less unchanged. I don't know. We need to find some Australians here to tell us what they think. And for the rest of the world, potentially up, but that may change as well. And that becomes more difficult to forecast. There I'm looking at countries like Russia and different places like that where we could see some increase. The Canadian supply-demand situation has been one of surplus. The previous 5-year average ending stock has been around 232,000 tons, or about 20% of usage carryover to usage to demand ratio, or demand usage ratio. Stocks to use ratio, sorry. This year we're looking at it being around a third, with the ending stocks being around 560,000 tons, which would be down a lot from what it was at the beginning of the season. But even though production is going down, we're still looking at fairly large ending stocks even a year from now. The big problem for the market has been the 2010 crop lentil. There's an old joke about people trading stuff. And you could actually apply this to 2010 crop lentil as you have a cargo of lentils that's moving around the world. First it goes to Turkey. They don't want it. They resell it to Dubai. Dubai resells it to India, and they resell it to Bangladesh, and the buyer there accepts the cargo and he opens it and they distribute it to the people. And then they come back and they say, my God, I got lawsuits like crazy. Everyone broke their teeth eating this stuff. Well, this is an example of where you have a cargo that was for the trading, not for the eating. And that's how I think a lot of people feel about the 2010 crop. It was for the trading, not for the eating. And that has been a bit of a problem. The good news is that a lot of it is livestock are less picky than people, and a fair quantity of the 2000 crop lentils that were left over have been fed to livestock in Canada, and that has really helped change things. When I was in Saskatoon in January, the farmers said that they had been dumping stuff out into that market. They used that word, dumping, because they don't like the price, but they recognized that the market did not want that, and they needed to move it. There was a lot of 2010 crop lentils consciously traded in bulk conventional shipments to Turkey and perhaps other destinations. The buyers apparently wanted it, and I guess the feeling was that they could handpick through and that they would be able to split it and get enough usable yield out of it at the price that it proved to be more profitable than buying good quality from the 2011 crop. Whether or not it worked out for them, I don't know, but that is one useful way to get rid of a crop where you have markets where labor is inexpensive enough that they can handpick and select through the crop and through shipment like that and come up with what's usable and what's not. When I look at the prices, you can see my price forecast range is down for greens, a little bit firmer for reds than it has been this past season. The averages there that I'm using actually are interesting, for which I did for yellow peas as well, and those are the season-to-date average trading level, rounded up a little bit for Canada. So it's actually a fairly accurate reflection of where the market has been so far this season. And I haven't juiced it at all, and that's the actual 5-year average. We track prices, and I calculated that over the last 5 years, and that's the average track value. Again, you look at the comparison, and here I just threw in U.S. Richley lentils. Otherwise, I stuck with the Canadian Laird, Eston, and Red. And you can see that as a group, they follow each other fairly well. The red lentils are the line at the bottom, and that has just fallen off the chart relative to the other types of lentils, and that's the reason that farmers won't grow it. That's being reflected back to them in very low bid levels, and they're not happy with that at all. Dry beans. Now I'm into stuff I can move more quickly. I think that the world dry bean market has reached record levels this past year, certainly for North American grown beans. There's a made in North America market because of production problems in Mexico, production problems in the United States, and problems in Canada. It has just created an intensely bullish situation. The whole region is short of beans. They're importing beans. Mexico has opened up duty-free import quotas for 100,000 tons of beans, which will go mainly to Argentina. They're talking about another 50,000 tons, and it sounds like they're talking about trying to resolve the phytosanitary issues with China so they can bring in beans directly from China instead of having them move through the U.S., sort of. Replace U.S. beans, which are going to Mexico, ostensibly. Argentina is going to grow more beans this year as well. Brazil has been having a lot of problems. Their various crops have suffered from weather problems, and their yields have been down and production has been down. That's resulted in a very strong import demand, and Argentina will respond to that on black beans. On white beans, they've had very good markets throughout the year around the world for white beans. Algeria bought a lot of the Argentina alubia bean crop this past year. Turkey continues to buy a little bit. There's a feeling that the traditional buyers in Italy and Spain have not covered their needs properly, and they're short. So I think there's optimism about new crop prices there, and it's drawing land. It'll draw land into beans in Argentina as well. World prices for beans should be easier next season overall. The world market and the North American market are two different beasts entirely. In the world, China and Myanmar rule in terms of pricing. Argentina fits in below them. Production levels in those countries will probably be such that the world price will not change too dramatically, and it might be a little bit easier, if only in response to the increase in production in the Americas. My forecast for beans is kind of flat going forward. I find it more difficult to think about beans because of the different countries it's grown in, and it's harder to get a sense of what will be motivating farmers there to move up and down in terms of production. So this is more of a trend forecast going through to 2016. World production for beans is down on average. It's been way over 21,000 tons the previous 5 years. This past year, about 19.5. And looking at this coming year, about 20.7. So again, fairly low, and that's kind of a bullish or friendly scenario. And this is the edible bean price comparison. Looking at Argentine black beans, Argentine alubias, and the average price in the U.S. The average price in the U.S. is the blue line there, and you can see it's just shot up tremendously this past season. Alubia beans have also been very strong. Black beans were much weaker, and that has been changing as they sell more to Mexico and places like that. So the black beans, they were fearful of carrying stuff over. Now they'll probably end up being sold out. So they're going to clean up down there. The Chickpea Outlook, here I thought Kabulis are probably where I should put more focus on. The Mexican drought limited production last year. It will probably limit production again this year. They're talking about maybe 100,000 tons. I think it'll be closer to 80,000 tons because some of the Mexicans I talked to are talking 40 to 60. So it's a very wide range. And because the crop hasn't been fully planted yet and we're not seeing how it's evolving completely, it is still a picture in motion. India's Desi crop is officially lower than last year. The Kabuli crop may be higher, maybe. I guess it depends on how much damage has been from the cold weather recently and things like that, whether or not it actually ends up being higher or having a usable fraction. If there's frost damage to the crop, there may be parts that just can't go into world trade and effectively reducing the crop in terms of from the trade's perspective, if not from a statistician's perspective. Kabuli prices, when I wrote this, I thought they could be lower on average in the coming season. I think Sudhakar thinks they'll probably be unchanged because, as he points out, world production is very much unchanged. And that could be bullish overall. However, if Mexico has a little bit more, and they do set the tone for the large Kabulis, they have been a bit more aggressive in their pricing than they were last season, so that's put a little bit easier tone, I think, to start it off. And hence, the price may be actually end up being lower on average than it was this season when it set records. World Kabuli production, 5-year average was 11.28 million metric tons. The 2011 crop was 11.28, which was average. This is all chickpeas, Desi and Kabuli combined. And, oh no, that was Desi. I'm sorry, I'm losing my mind here. Kabuli being about almost just under 2 million metric tons in the previous 5 years. This year and last year being quite a bit below average, and that's why it keeps the market that firm tone. Desi probably up, possibly up in the coming year over it was this year, looking at not just in India but all over the world. And again, that's highly speculative as to whether or not that occurs, but I think there's good potential for that. When you look at the price comparison, Mexican 11 millimeter is obviously a premium chickpea, and that's at the very top level there. I looked at Australian Desi prices, which are at the bottom of the market, and the Canadian 8 millimeter, which occupies middle ground, and that just gives you a good sense of the overall picture of where we've been for the last few years on chickpeas. And Kabuli's obviously holding a premium to Desis. And I use Desis, the Australian Desi, as a proxy because that's imported. I'm just about done. I'm sure I've gone over. I don't know. Apparently I'm speaking on IST, which sounds an awful lot like PST. That's my time zone. My time zone, we call it Pacific Stretchable Time. I don't know if that sounds familiar. When you have things happen in Vancouver, we had a dinner on last Friday night. My two nieces were there. Both are seriously pregnant. And the one niece who was due first, she was an hour late for dinner. It turns out it was the other niece who was due second. Her baby was born on Saturday. So the other one I haven't heard, but I'm sure it's been born by now because it was due on Saturday as well. But the older one had to beat the younger sister, which is amazing that their sisters both got pregnant at exactly the same time and both due on exactly the same weekend and both having boys. It's quite incredible. I was thinking about the factors that drive price, and I think I'll go more quickly through this because I know that I've been talking for a long time. Competition for acres, competition for consumer demand are the two most important drivers. Competition for acres because farmers will move from one crop to the next depending on the relative profitability of the crop. I can't look into the minds of farmers to figure out what they think is profitable on a field-by-field basis, so I look at things like the gross returns and compare them out. When I look at the gross return of peas in Canada and lentils in Canada, we need to be around 120 to 125% of wheat and durum in order to grow acreage. We need to be 105% of canola in order to grow acreage of those crops. In the last year, pea returns have been very competitive, probably around 135% of cereal grains. around 90 to 95% of canola, and that's what will pull up acreage. Lentils have been way down below their recent average. They've been closer to 100%, I think, of wheat, so on a par, but they should be 120 to 125%, and they've been around like 75 to 80% of canola, so farmers just don't want to grow them. And I think that applies all over the world. When I talk to farmers, I tell farmers you have to look at the last part of this, which is consumer demand. You can't ask so much for your peas or lentils that people will eat rice instead, eat pasta instead, that they'll switch into another pulse. Conversely, you can't ask farmers to accept so little for their peas or lentils, even though I know India needs very low price, lots of quantity, but there is a point at which they won't grow them. And that is the problem that you face. So you have to think of that too when you're trying to negotiate for price, and you have to be accepting sometimes that you just have to pay more. And if you look forward, and that's why I wanted to start with the deep scenario, you can see in the long term you have to be very cognizant of the need to pay more, and I am done. Thanks.
In its totality, pulses form a very small segment. You have corn, you have wheat, and you have oilseeds like soybean, which are much, much larger commodities. So I want to share with you my view about the direction which this market is likely to take over the rest of 2012. And my sense is that the pulses market will probably follow this direction. But I'm going to set a direction. And I'm going to, over the next 15 minutes, take you through some of these expectations of mine. I'm also going to raise a lot of questions. There are questions to be thought through. The first one is in the last 2 years, that is the whole of 2010 and 2011, we had a series of weather events which affected supplies, as a result of which actually prices increased. Farmers, particularly in the industrial economies and developed economies, Canada, the US, and Australia, and several other countries, have actually got now a decent amount of cash reserves. And fertilizer prices, simply because of a fairly moderate increase in crude prices, fertilizer prices have remained quite affordable for the farmers. And therefore, my expectation is that over the next 6 to 8